So the title isn't clickbait. I did in fact double my net worth in less than a year. And I did it investing in stocks on the ASX 200 here in Australia. And in today's video, I'm going to tell you what I've learned from this journey. My name is Matthew, and on my channel, I like to talk about growing your career, your income, and improving your personal finances. So if you're interested in that sort of thing, or that's something you'd like to achieve, then please subscribe to the channel. Also, be sure to check out the recommended playlists and videos in the description box below. Now, the first thing I'd like to say is the goal of today's video is not to say, do what I did and you'll get the same results, or, oh wow, I'm so amazing, look what I've achieved. I'm just trying to tell you a story about something that I achieved or something that I've done and what I learned through the process. This is by no means financial advice. I am not an expert on investing in shares. This is seriously just a story that I hope you will enjoy. So how did all the pieces of the puzzle sort of come together for me? I think the first thing is just to go to the beginning. We moved to Australia in November of 2019. So we had sold everything. And as a result of that, all of my net worth was in cash. And I was looking for something to do with the money. And I very quickly discovered that savings accounts here in Australia pay about 1%. If you're lucky, otherwise it's normally a bit less than that. And I was just looking for something to do with my cash. Then March hit and the stock markets globally just plummeted. The bottom of that curve is the 23rd of March, and I started buying stocks in early April. I had absolutely no idea what I was doing. All I knew was what my dad taught me, which is to do the opposite of what everybody else is doing and always diversify. So off I went. So I scratched together some basics. The first thing I got was a trading app. I chose CommSec for no special reason, except that it was linked to my bank account and integrated with the bank that I already had. And I used this to try and have a broker platform to, number one, trade on, and number two, there are a number of respected brokers who make recommendations on certain stocks that you put on your watch list. So this just gave me a start, somewhere to start looking at potential stocks to buy. The other thing that was great is it had charts, trends, histories. So a lot of what I would say high level or snapshot information was kind of all at your fingertips. And that, for somebody who was just trying to get into something relatively quickly, was more or less good enough to get going. I would then read articles about stocks, as many as I could find, and then I would compare it to the information that I had on the app. And I would target stocks where the drop from where they were on average to what they dropped to now was very high. And that would be the kinds of stocks that I would try to buy. Not a very fundamentally good strategy, by the way, because of something called equity dilution, but that's a topic for another day. The other thing I did is I made sure that the companies I was looking to buy had high liquidity, because I knew riding out the pandemic storm was going to be a challenge, and companies that had a high market capitalization where people were heavily invested. That was really my only entry criteria. So then it came time to choosing stocks. And this is where we talk about the Motley Fool. Now, for those of you that have heard of the Motley Fool, it's basically just a web-based newsletter where people write articles and recommendations on hot stocks, tips, etc. So they try to hook you in by giving you free advice so that you then subscribe for their really, really good advice. I only stuck to the free advice and read a few articles on some stocks, and then I would use my app. And there was one day there was an article early towards the end of March, beginning of April, which was a top 10 stocks that they recommend buying in the pandemic. I filtered it through my criteria, and I started to buy my first stocks. In fact, I bought my first stock on the 4th of April. I'll tell you sort of the breakdown and the story of that now. I just want to say one more thing about Motley Fool. Absolutely terrible stock advice. As I've come to learn. You'll read an article on a Tuesday saying these are the top 2 stocks that brokers recommend you should sell, and on a Thursday those same 2 stocks will be on the top 2 brokers recommend to buy list. So not the best advice. I do not recommend getting stock tips or following stock tips on Motley Fool. I recommend, like most people who talk about stock investing on YouTube, just do your own research and make solid decisions based on fundamentals and not what somebody on the internet wrote on a website called Motley Fool, for crying out loud. All right, so on with the story we go. On this top 10 list were a number of stocks, but there's a couple here that I'm going to mention. So I bought Afterpay, I bought PointBets Holdings, I bought EML Payments, and I bought Zipco. And this was all around about April. So if we look at Afterpay's graph, I entered here where the stock price was around about 20 bucks. I didn't hold it for that long, to my great regret, because if I had, I would have made a 500% return. But I ended up selling it at about $41. So when it got to the point where I could double my money, I exited. The next one is PointBets Holdings. Now this stock has gone absolutely crazy. I entered it here around about the 3rd of April for about $2.25. And I sold this one for about, I think it was $5.50. Okay, so I didn't hold it. If I had, again, 600% profit. Stock investing is not a perfect science. You have the benefit of hindsight. So I don't beat myself up about these results. But it's just amazing what has happened with some of these stocks and the turns that they've had. EML Payments, bought it at about $2.40 and then exited close to about $4. Now, this one's actually dropped and then sort of come up again. And then the last one is Zipco, another BNPL, buy now, pay later stock. I entered here at about $2.09 and I sold it at about $6. So those were some of my major contributors to the ridiculously short-term profits that I've actually realized. So these are positions that I've closed. I have closed some others, but I've only chosen the top 4 just to show that for the most part, this was just dumb luck. So I had 100% return on Afterpay, 250% return on PointsBet Holdings, 125% return on EML, 250% return on Zipco. And I never got bothered about hindsight. You know, if I'd held Afterpay and PointsBet Holdings, I would have been up over 500%. But by the same token, if I'd held Zipco and EML, I wouldn't have made as much of a profit as what I did. As long as you compound your returns, I think you're being sensible. So my philosophy was close a position on a stock if your intention is to open a position on another. And that's what I did. So whenever I sold or closed a position, I would buy new ones. And also because I had no idea about stock investing in the beginning, once I bought my first stock, I got very, very heavily invested into trying to learn and understand as much about stock investing as I could, as quickly as I could. And I very quickly realized the type of investment strategy I wanted to follow. I want to be an income investor. I like companies with a strong track record of paying dividends. All of the positions that I showed you earlier that I closed, none of those companies have ever paid a dividend. So while there was a nice capital gain on the table, the main motivator for me to close that position was so that I could open new positions on stocks that would probably also have a capital gain that I could realize, but also I've got that dividend income that I find quite attractive, especially as a long-term investment strategy in a country where I can get 1% on a savings account. So if I can show you the idea of compounding your investment capital, it's a simple model that I put in here. So if you've got $10,000 initially and you have a great start like I did and you get 100% return, then you buy the second stock. And if you reinvest your gains every time, which is the column that says reinvest gains, your returns on you start to create what I call ROAR, right? Not a lion, but returns on returns. So if you just invest your initial capital, so you sold stock 1, and then you bought stock 2, stock 3, that's the initial capital. So you can see you're only going to get the returns on the initial 10,000 every time. But in the second column, if you're reinvesting your gains, you can see your investment capital is going to be twice as much, and you're literally just opening and closing the exact same positions on the same stocks. The only difference is you're investing your gains and your initial capital in the second scenario, and you're literally getting twice as much in terms of a return and in terms of much growth. This is more or less how I achieved 100% return on my investment strategy in less than a year. I just compounded or just fully reinvested my closed positions in new positions. So I started with 10, and overall I bought 27 stocks, and in total I'm currently holding 18, and I've doubled down on 6. So a lot of the gains that I've made I've already closed. Some of them are still in the market, so yes, it does move up and down. But more than 60% of the gains that I'm speaking about are already realized. Only 40% is still sitting in the market. I was lucky as well because stocks recovered at different times. So the recovery on, for example, Afterpay and PointsBet Holdings was really fast. It was around about May, June. I could then exit and buy into stocks that hadn't recovered, like travel, etc., etc. So there were different recoveries at different points. So I just kept an eye on trying to exit one and quickly enter another one that still potentially had a lot of recovery opportunity, and as a bonus also had a good track record of paying a dividend. In short, it looks like I had incredible results and I'm some kind of expert, but I'm certainly not. Just consider the following. If you had just bought the index at the time that I started investing, your portfolio would have made 46%. If you'd exited and entered at positions just within the portfolio or just within the index, you could have probably compounded some of that return. So the market recovered 46% and I beat that just by compound reinvesting. Think about some other reasons or some other things that I had that was incredibly lucky. Number one, I wasn't already in the market facing massive capital losses. I was clean, I had zero, no baggage. Number two, I had the cash available. Why? Because I just entered a new country and just coincidentally, all of my money was in cash, and a global pandemic where people always tend to panic sell once the pandemic or once the bad news. So for example, another example of a stock crash was the subprime crisis in 2009 or 2008. People panic, then things start to normalize and things get back to a semblance of normalcy and recover. So I bought at the bottom of the curve, which is just luck. And I could buy a lot at the bottom of the curve because none of my money was locked up in anything else. It wasn't locked up in real estate. It wasn't locked up in any other type of asset class. It was just very, very lucky. Right place at the right time. I got lucky with some stock picks. I mean, trusting the Motley Fool could have gone a totally different way. I made every mistake there is to make. I sold on some stocks too soon. I had FOMO, which is where you make emotional purchases because you worry that a stock is starting to recover and you're going to miss out, and I overpaid on certain stocks. The one thing I think I did well though, which is why I've had a pretty good outcome, is I didn't follow the herd. I did the opposite of what everybody else was doing. So when people were selling and panicking and saying don't invest in stocks, that's when I started to buy in stocks. And the second thing that I think held me in good stead was when I closed a position, I opened a new one immediately. So I got that compound reinvesting benefit. The learning curve for me has been steep. I have been studying stocks now for close to a year, and I've actually been learning how to buy stocks properly. And the beginner stock investor learnings that I've had, I actually look forward to sharing those on the channel. And if I could have my journey over in hindsight, there was a lot of things that I would do differently. And if I was starting to do my first investment tomorrow, I would have a lot of good suggestions and advice for somebody who wants to get into stock market investing that I'm looking forward to sharing on future videos on the channel. So if that sounds interesting, please subscribe and leave a like on this video if you've enjoyed this one. Like and comment with any questions that you may have. If you'd like to check out some other content on the channel, check out the descriptions below, or the description box below, where I've put playlist references, specific video references. There's lots of interesting content all over the channel. Thanks for watching, stay safe, and I'll see you soon.